What's up everyone, it's Scotty with Money Investing. So markets here with a second consecutive week of losses. The Dow Jones not so much on the day, it was higher, and we continue to see a little bit of rotation out of tech over to value and more defensive sectors and defensive parts of the market. So PPI numbers came out today, CPI numbers came out yesterday, including consumer sentiment came out today. So lots to unpack in this market update. Hope you guys are doing well and are ready for the weekend. Make sure that you drop a like and of course subscribe to the channel. If you're just joining us for the first time, link to our Discord and Patreon is going to be down below if you're interested in joining us. Of course, getting access to all the buy and sell alerts, options alerts, trade ideas, everything's going to be included, as well as the intrinsic value spreadsheets and members only private videos. I plan to release multiple members only private videos this weekend, including 3 to 4 trade ideas for all the members as well. So again, links are going to be down below if you want to be a part of our money investing community. So first things first, this right here was how the markets performed. Dow Jones still rallying over 100 points. We had the S&P flat and the NASDAQ dropping about 0.5% on the day. We did have over 3,000 stocks declining on the day with about 2,900, 2,950 pushing higher. And again, NASDAQ Composite slips Friday, falls 2 weeks straight for the first time in 2023. This is the first time in all of this year. And S&P 500 and the NASDAQ declined 0.3% and 1.9% respectively on the week. Both registered their second straight losing week, a first of that length for the technology-heavy NASDAQ since the conclusion of a 4-week losing streak in December 2022. So it's been a while. This last time we actually basically witnessed this was back in the bear market of December 22, like pretty much 2022. The Dow is the outlier of the three moving averages, advancing 0.6% this week. Investors had much to celebrate earlier in the week, and July's consumer price index, a major inflation reading for the markets and the Federal Reserve, came in softer than anticipated on a year-over-year basis. Prices climbed to 3.2% on an annual basis, less than the Dow Jones estimates of 3.3%. So we've talked about a potential sector rotation. I've mentioned this before from a tactical rotation standpoint and how the markets, and myself included, will start to become a little bit more defensive and more sort of value over growth, because of course growth in tech has rallied quite substantially, and because of those reasons multiples have expanded to a level where valuations are not starting to not make much sense. Crude oil has also extended its rally to 7th week for the first time since June of 2022. I mentioned this also in my previous market updates and how a lot of people are not talking about crude oil because it's consistently moved higher. And September natural gas contracts climbed to 7.5% this week. September gasoline contracts added 6.5% this week, the most in a week since early March, and rising for a 4th week in 5. So we're constantly seeing a lot of momentum in energy prices, and as a result, energy relative to the S&P 500 is performing really well. Since August, the first week of August, you'll notice we have seen a pretty substantial increase in energy relative to the S&P 500. This is the energy index in blue, S&P in green. You can see it's more or less flat. It really hasn't moved much, and energy has consistently moved higher, up over 3.5% as well. Now this, in my opinion, will start to show once again in the energy prints, the CPI print in the months to follow. We already saw a little bit of an uptick in energy prices, and I think as this continues, as there's the supply cuts and of course crude oil prices continue to trade back over $80 a barrel, natural gas continues to push higher as well, there is a possibility that we continue to see energy push higher and of course be reflected in the CPI report next month. Consumer sentiment came in at 71.2. This has dramatically improved on a year-over-year basis. At one point, we were in the 50s, low 50s, sub 50s, and now we're back over 71. And of course, year ahead inflation expectations are now sitting at 3.3% from the consumers as well. PPI numbers again came in a little bit hotter than what the expectations were, slightly 10 basis points over consensus every single metric. 0.3% month over month, 0.8% year over year, 0.3% core, 2.4% year over year for core, and X food and energy and trade services was the only one that actually came in line. Everything else was slightly higher than what the expectations were for PPI. This right here is going to be the state of the market. So again, healthcare, energy, defensive, industrials, utilities were the sectors doing really well. Technology selling off, with Google flat, Amazon flat, Meta, Tesla here down over 1%. NVDA definitely selling off quite aggressively. AMD selling off quite aggressively. Microsoft and Apple also very, very flat. These are companies that are just holding on by a thread, considering that they are trading at a very, very important support level. So energy, healthcare, utilities, real estate pushing higher. Of course, comm services, cyclicals, and technology selling off on the day, underperforming. And in the last 1 week, we do have cyclicals and technology selling off, with energy, healthcare, and utilities kind of leading the way in the last 1 week. And of course, in the last 1 month also, technology has struggled, comm services have struggled, cyclicals have struggled, and the only sectors pushing higher are energy, healthcare, financials, and defensives. It's not a surprise. We've talked about this tactical rotation. We've talked about how the market positioning may shift over to more defensive, more value, more financial utility sectors away from technology, considering how much of a rally we've witnessed so far this year. Cotton prices, sugar, lean hogs, orange juice, all pushing higher on the day, with corn, wheat, VIX, coffee, canola, soybeans, copper prices, everything selling off. Bitcoin just a little bit over 29,000. Ether just under 1850 at the moment. So going over to Bitcoin here, again, just a lot of consolidation sideways, not really much for us to go over other than the fact that it's trading sideways in that range between 31,600 and support level is going to be 28,300. Ether also in a very similar trajectory where it is trading sideways, consolidating in that range. Resistance is going to stay put at 1930s, support level is going to stay put at 1820s for Ether. And crude oil obviously continues to make waves, still trading above $83 a barrel. This right here is going to be very, very strong area of support for crude oil, and of course resistance all the way up to $93 per barrel. Support level exactly where it's trading at the moment. Now going over to the S&P 500, SPX here, green candle on a red day definitely does suggest the buyers stepped in, and guess where they stepped in? At that support, right? So 44.46, 44.50 was that support that we talked about. This right here is the level, previous resistance acting as a potential support here for the S&P. So it's going to get quite interesting next week whether this technical support continues to validate or if we break down below that level. And a lot of it is going to depend on a lot of individual stocks, which we'll go over in just a minute. But S&P 44.50, 44.45, very strong support levels to watch for this index, and whether we see buyers stepping in or if we see that continued breakdown and accelerated sell-off for this index. The NASDAQ here has already broken down and getting rejected from that 21 EMA. So again, a little bit of a green candle on a pretty decent red day. So next support really is going to be down to this support here at 13,300 inside this green rectangle for the NASDAQ, kind of in line with this previous support. But this time around, we are trading below the 21 EMA. The technical trend has shifted a little bit. So that is something to keep in mind, as there could be more potential downside for the NASDAQ, and I wouldn't be surprised if it does end up trading down to 13,200, even as low as 13,000 points for the NASDAQ moving forward. Now, Apple, Amazon, all these companies are just hanging on by a thread. You can see that Apple 177, it did break down below that level at 176, but managed to close back higher about 177. So this right here is still going to be that support level to watch for Apple, and right now we are just hanging on by a thread at that support here. And of course, if we do see a breakdown below this, then like I said, I wouldn't be surprised to see us all the way down to those moving averages. We're already pretty oversold on an RSI and MACD standpoint, but of course a breakdown below 177 can put us down to as low as 150s, 157, 158 to be precise, are going to be those next levels to watch for Apple. Talking about Amazon also here just hanging on at 137. That's a big support level for the company, and we still have a little bit of a gap to fill after the earnings were released. So in case we see a breakdown below 137, of course next support is going to be down to 126 for Amazon moving forward, with the resistance staying all the way up to 146 for the company. And right now we're just consolidating sideways, and it's been slowly and steadily kind of drifting lower. Green candle on a red day, buyers still stepping in, but again, that's going to be a very, very important support level. Tesla here also validating 240 and getting bought up here fairly quickly. So it did come down to as low as 238 and getting bought up to close above 242. Same thing with Apple, same thing with Tesla, validating that support levels. During the day, we did break down, but of course, buyers stepping in to bring us back over that support level. So that's going to be the level to watch at 240. In case we see a breakdown below that, of course, 228, 225. This right here inside this green rectangle is going to be that level to pay attention to, and a support level where I could see myself maybe selling some puts down in the 170s, 150s at those prices for Tesla. But right now the covered calls are doing really well. And again, if you want to get access to all the trade alerts, trade ideas, options alerts as well, link's going to be down below. We are right now, so I'm personally up 75% on one of the covered calls, and other ones I'm up like 30% and 15% on the other two. So those are great hedges, right? So those are considered as hedges because I want to own Tesla shares for the long term. But while Tesla is coming down, I'm able to sell calls, and those calls are able to generate more premium and of course generate cash flow for me as well. So they are printing right now as the price is going down. So 240 is going to be that support, 225, 200s. Next ones to watch, resistance at 275 for this company. Talking about NVIDIA here, NVIDIA continues to slide lower and lower, coming down to $407. In fact, getting bought up at that support, closing in at just over $408 per share. This right here is going to be that support level to watch for NVIDIA. And of course, if we do see a breakdown below this level, I would not be surprised one bit to see NVIDIA back under 400, sub 400, maybe down to 375 or as low as 350s for NVIDIA moving forward. So those right there are going to be some levels to watch for NVIDIA moving forward. And already we're starting to see a breakdown below the 21 EMA. So I think it's possible that we do see a little bit of a breakdown below this level as well, considering the multiples have expanded, valuations have gotten crazy high, and NVIDIA needs to come down to back to earth here and reset a little bit of that valuation. So support level is going to stay put down at 372, all the way down to as low as 350s for this company. Advanced Micro Devices also validating $106. So every single stock that we're going over is validating that support. We're at a very critical area of support here for most companies, and of course for the S&P and the NASDAQ as well. But all of them got validated today. Will they get validated next week? That's still yet to be seen. But AMD also $106 came down to that level, 106.48. Buyers stepped in to push us back over 107. So this right here, very, very important and critical level to watch from a technical standpoint for AMD. The moment it breaks below that level, the moment it breaks below $100 is when I will be looking at selling puts in the 80s for Advanced Micro Devices. Talking about PayPal here, and PayPal on the day down almost 2%, continues to sell off. Support level is going to stay put down to $60 once again for PayPal. So we're pretty much coming back down to the same level as we were prior to this entire move higher. So support level is going to stay put at 60, resistance all the way up to 69, closer to $70. Very, very oversold RSI and MACD for PayPal as well. Talking about Square here, and Square also selling off pretty aggressively, down over 2.6%. So continues to make lower lows here, and of course we are coming down to an oversold RSI and MACD. Next support level is going to be down to $58, $59 for Square moving forward. So that's going to be that next target, and it does offer pretty good swing trading opportunities. We even talked about it in our previous market updates as a short trade on Square, considering how overbought it was. And of course from those levels it has already dropped over 25%, but now we're going to be on the opposite side of that trade for swing trading it back to the upside, which I will share details on, and of course a members only private videos with all of our members this weekend. Next up on the list is going to be Meta Platforms, and Meta here on the day continues to slide lower, down about 1.3%, trading just over $301 per share. Support level is going to stay put at $300 for Meta, and of course next target is going to be down to 250s for this company. So this right here is going to be that next support level to watch for Meta Platforms, and of course we have completely come down to fill this entire gap after the earnings that Meta reported. So support level is going to stay put at 300, exactly where the price is trading right now, all the way down to as low as 257 for Meta. Netflix here also trading at support here, almost down to $410, $409, down almost 2%. So this right here is going to be that level to watch as a support and an area of demand. Of course, if we do see a breakdown below this level, then 380s are going to be the one to watch. Resistance stays put at 458. Now we got Google here. Google also just consolidating sideways, trading above that 21 EMA, getting validated at that support. Green candle on a red day, basically a flat day. So resistance is going to stay put at 131. Support level right now at 127, all the way down to as low as 115 for Google. And Microsoft here continues to break down below 322. So this right here will go ahead and turn this level back into a resistance for Microsoft. The next target and support is going to stay put down to $312 per share for this company. And finally, we've got Shopify and Enphase, and Shopify here validating that support also at $54, oversold RSI, oversold MACD, trading at support very nicely. And of course, we have bounced out at that level previously many times for Shopify. So support level is going to indeed be 54, resistance at $68. And finally, we got N-phase. N-phase also stabilizing a little bit, consolidating sideways, and of course, validating that support. And we are still very close to that good deal area. RSI and MACD also incredibly oversold for N-phase at the moment. Resistance is going to stay put up to as high as 151, 152, kind of in line with that 21 EMA for N-phase. So bottom line is there's a lot of stocks out there that are trading at a very critical area of support, almost all of them. And that's really what's going to dictate where the market ends up going starting next week, because S&P is also at a very critical support at 44.50, 44.45, around those levels. So in case we see a breakdown below those levels for Apple, for Amazon, for Tesla below 240, Apple below 177, NVDA below 400, then of course there's some possibility the markets kind of hold up these levels and start recovering back higher. But in case we see a breakdown, then we got to be ready, we got to be prepared to see some more potential downside, and maybe the S&P comes down maybe 6 to 8% from its recent highs, and the NASDAQ comes out maybe 8 to 10% from its recent highs. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord, Patreon is going to be down below if you're interested in joining, and of course getting access to all the buy and sell alerts, options alerts, trade ideas, of course members only private videos, intrinsic value spreadsheets. Everything's going to be included. As always, happy investing, and I'll see you all in the next video.